Hi everyone! If you are watching this video, then you're probably wondering where to get started with sorting out your taxes as a sole trader. Confused? We're not surprised. But don't worry, we promise it all gets easier, especially once you know what to do and when. So where do you even start? The first thing to look at is your financial year. This is the 12-month period that you use when you record all the transactions that happen in your business. You can use any 12-month period that you like, but lots of sole traders match theirs to the tax year. This is because the tax year you need to pay is worked out based on the profits you make during a tax year. So matching your financial records to the same time frame can make things much simpler to manage. A tax year always starts on the 6th of April and then ends on the 5th of April the following year. But don't worry if this means your first year is a bit shorter than the others. It's actually really common and it won't cause you any problems when you submit your self-assessment tax return to report your earnings. This brings us to some really key points to remember about paying tax. The first point is that as a sole trader, you will only pay tax and national insurance on your profits, not on the full amount of money you make from being self-employed. Your profits are what's left over once you've paid your bills. So it's super important to keep good financial records and claim back all of those allowable expenses. The second key point is about tax allowances. Everyone in the UK is entitled to earn up to a certain amount each year before they need to pay tax or national insurance. This bit can seem overwhelming, so don't worry if you need to go over it a few times. We will start with income tax allowances. The personal allowance is the amount you can receive in a tax year before needing to pay income tax. You might earn money from different places, but you'll only get the personal allowance once in a year. For example, if you work for an employer as well as being a sole trader, the total amount you earn from both is added together. The personal allowance will be deducted from the total, leaving you to pay tax on what's left, known as your taxable earnings. The allowance can change each tax year, so check out our tax rates and thresholds blog for this year's amount using the link in the description. But it doesn't stop there, because sole traders also get a trading allowance as well as a personal allowance. The trading allowance means that you are allowed to earn up to £1,000 from being self-employed without needing to pay any tax on it. It's a great helping hand for any side hustlers out there. So, how much tax will you need to pay? Again, this can be a little tricky if you are not used to it, so take your time. The first thing to understand is that income tax is charged based on tax bands. It sometimes helps to think of these tax bands as a stack of containers. The first container is the personal allowance, so you won't pay tax on the money that's in it. When your earnings start to fill up the next container, you'll pay tax on everything it holds using one rate of tax. As you earn more, you spill over into the next container, but everything in that one is taxed at a different rate of tax. Tax rates and bands can change from one year to the next, so again, use our tax rates article to stay up to date. So that just leaves us with national insurance. The type of NI that you pay as a sole trader is different to the NI that employees need to pay. It's a bit complicated at the moment though, because the rules around self-employed national insurance are changing. Anyone who was a sole trader in the 2023 to 24 tax year has two types of NI, Class 2 and Class 4, to think about. One of these, Class 2, has been abolished. So when it's time to declare your profits for the tax year starting the 6th of April 2024, you will only need to pay Class 4 national insurance. Just like income tax, the amount of national insurance that you need to pay depends on the amount of profit you make. So be sure to claim all those allowable expenses and double check the rates that apply to you. Thanks for watching, and remember to subscribe for more content like this. If you have any questions, please drop a message in the comments section below.